I've got some examples of low angles up and down on peaks. And we primarily look at trend red and power red and swing Zion, the big three. Uh, and we note how far or how high trend red is above the zero line. Because if it's real weak, like if it's under, maybe 50, if it's under 15 in a low angle up, sometimes that's too low. And if you check closely, you might find that you're in a bottlenose pattern and the next day it will go up instead of down. But there's almost always the supporting evidence to identify which way the line is going to go. You just have to look at it. And excuse me, in these examples I have here, these two are just real basic. I've got a low angle down on a peak. This just for notation. Trend red is at 75, so this is a decent one. And over here, trend red is at 181. And it's easy to get up there when you're in $1 stocks. Typically, when you're in 10 to $75 stocks, the trend red will go between 30 and 180. And if it gets really high within that price range of stocks, then just watch carefully, because it might not. It may go down. The line may go down, but the price may not. And when you're in cheap stocks, the $1, $2, $3, $5 stocks, they'll move into the hundreds real easily, and that's fine. They can be 500 or 600 when you're in cheap stocks, and still act normally or properly. But in any case, you got on the left here, we have a low angle down on a peak, and obviously we get, looks like about 3-4 days of really nice downtrend movements. And in fact, the next day was a good gap down. Just like in the low angles near the bottom, you would have power pink low and underneath the zero line and the power orange line. Well, the opposite is true when you're on a pink. The power pink opposite is true when you're on peaks. The power pink will be higher above the zero line, and in both cases we see that. And in both cases here we have nice downtrends the next couple of days. Very typical, very classic. In this example here, I've got 4 examples, and these are this particular one far on the right is a trend red at 24 with a low angle up, and again in this particular case, our power pink is really high, so we know that we're fine with going down. Over here, power pink is climbing up. In this second one we have here, trend red is in a TOC pattern, so it's a low angle going down, and we're thinking, well, this is a good downturn. As it turns out, we didn't watch the yellow line. The yellow line needs to be above as well so that it can go down. And in fact, over in this other one here, it's running pretty flat. But on this second green line right here, power yellow is underneath, and when it's underneath, it typically will have a tendency to go up. And so even though the price was flat for 2 days after this green line, the third day that it did get a nice up. When the red line down touched the blue line here 2 days, or in between these 2 green lines. So watch your power lines, your power pink lines and your power yellow lines when you're looking at these low angle downs, or when it's a turnaround or should be a turnaround. because some people will look at this as just a normal turnaround, which I'm not going to argue about that, but some people would treat it as a low angle down. Over here in this one, we have swing gray highest. And that when that happens, we usually get some stronger movements because gray is highest. And red is in a low angle down right here. Power red is also in a low angle down. And trend red in this example here is at 24, which isn't very high, but we do get a real nice downturn. And of course, pink is real high. It's the highest right under power red. And again, yellow is high, so we get a nice downturn, a couple, 3 days there. In this example here, we have trend red in a downturn. And I wanted to give you one of these or show you one of these because they're fairly easy to identify with. In this particular example, you've got the trend trio going up, and so and you also have trend gray and red in divergence. You have, if you look, probably look closer here, you have the trio, pink, blue, and white going up, yellow going down, Zion going down. And so you've got a lot of, just on these two charts, if I looked at the others, I think I could give you a lot more information, but you can see it on these two charts that this stock is not going to go down the next day. You also have here power red is in a inverted head and shoulders pattern, which is indicative of going up. And so and also the general tendency, what you've got going here is your power pink and yellow, blue lines. They're all going up. They're all under zero. And so with the divergence, that's the thing that really picks it up. With the divergence, there's just very little chance that it's going to go down normally. It just goes up. In this example here, we have power on the vertical green line. We have power red going up at a low angle, and this is a classic sky touch in the trend chart. Red over here about looks like the fourth day. The red crossed over zero, and now we have a 4-day sky touch. We never go past 4 days when you're looking at a sky touch in the gap situation or the proximity group patterns that we compare with the sky touch. The sky touch being one of the gap patterns, identical indicators, the down touches in the trend chart. There's 5 down touches and 1 up touch, you might say, that qualifies, and we call it the sky touch simply because there's so much pressure moving up that the trend red and green are going up, and you have this power pattern right here down below, the power 5. You have directional divergence with Zion going down and the power 4 going up. Now that's a classic gap up pattern right there. And so we can just look at the power chart and see that on this vertical green line day, it's not going to go down the next day. It's going to go up. And whatever the situation was, I'm not going to get into the other charts right now, but we had a pattern where it gave us a small green candle, and then we had a stalled candle, and then we had a bigger green candle. So we're in about a $16 or $17 stock here, so it's not we don't have a huge amount of movement, but a good example. Over on this vertical green line, we have again a TOC pattern, or we're in a down touch format, and again, as on one of our previous examples, we got power pink and blue going up, power yellow going down, and white is going up, but Zion is going down. We actually have a down touch with Zion, which is the price, our power Zion. That's not the price indicator. Swing Zion is, but power Zion is a powerful or a powerful line for us as well, because it's part of the Power 5, and it's the line that is used in comparison to all the other lines. So when it down touches zero, there's a good chance it's going to go up. And so this example here, when you're looking at it that day, the reality is you think you might have a next day down. If you don't look at your divergence in your power lines and the rest of your charts, you're going to miss it. You're not going to get burned, however, if you pay attention to what you're doing, because you're going to wait for the open, and the following day, on this day right here, it opened at 17.95. It went down to 17.81. So it dropped 14 cents, and that's enough for a lower tail. And that's exactly what you get in a green candle, in the green candle activity theory. That if you haven't seen that information, you need to look that up, because green candles will normally, no matter whether they open above, at, or under the previous close, when they open, a green candle will go down typically first, then goes up all day, builds the body of the candle, reaches a peak, and then by the end of the day it drops down a little, and you have an upper and lower tail on the candle. That's typically the way a green candle moves. And so, especially when it gaps up, on the next day here, this candle gapped up. Previous close here was 17.55, and it opened at 17.95. So it's just pretty basic stuff, but it's really powerful. Low angles up and low angles down will give you just a huge amount of opportunities. They're normally just one-day opportunities, but you can see them plain as day. If you find divergence, bam, that's even better, because then you're going to get a bigger candle going the other way. In all likelihood, it doesn't guarantee it. It's just that we know from experience that multiple lines of divergent activity creates bigger volatility or bigger candles, greater volatility and bigger candles. So easy stuff, but you got to pay attention and look at the evidence. If you will analyze the supporting evidence, you're not going to miss very many.